For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. And today our webinar title is Behaviors in Investing and Trading. So welcome everyone once again to this webinar. My name is Shen Chu. I'm moderator for this session. So it's lovely to see you all again on this Wednesday evening. So today we're going to talk about what are the common behaviors in the stock markets. What are the blind spots in those behaviors, and whether we can capitalize on these behaviors, to make some money in the stock market. So we will talk about these behaviors in investing and also trading. All right. So disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities should we mention here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. Okay, allow me to briefly introduce our guest speaker for this webinar. He is a position trader and investor in the capital market. He is also the founder and chief master trainer of Street Finance. His signature program, Street Trader Intensive Program, allows individuals to trade without monitoring and speculating in the market. He is also featured in Britishpedia Biographic Encyclopedia, Successful People in Malaysia, 3rd edition. All right. So, very young and successful entrepreneur. He is often featured in media such as City Plus FM, Borneo Post, Sinchiu, etc. He is engaged by investment institution like Bursa Malaysia in this case, and other investment banks for various seminars, webinars, workshops. He is often invited as a speaker in university and colleges as well. So he's none other than Jin Hao from Street Finance. All right, so welcome to the program, Jin Hao.
Hi, Shane.
Yeah, great
Can
to
you
see you
hear
again.
me? So I take over from here.
Yes, go ahead. We can't wait to learn from you.
All right, so I have to figure out how can I share my screen, because I have used to dual screen and suddenly I only left with one screen right now.
All right, I understand that you're not streaming from a usual place, right?
Yeah, all right. So let me just let me just check if I can do it. Sorry for the inconvenience. Slideshow. So is my slide shared in full screen?
Yep, in full screen. Perfect.
All right. Thank you very much. Okay, so thank you, Shane, and thank you everyone spending your time tonight here in this webinar. My name is Jin Hao, and I'm a position trader, investor, and trainer in the capital market. So because right now, okay, the market is very not so great, and a lot of people have not been doing well, things like that. Okay, now I just want to ask you guys on a scale of 1 to 10 right now. Okay, on a scale of 1 to 10 right now, 1 being the most bearish and 10 being the most bullish and 5 being in the middle, how would you rank the current market performance right now? Okay, let me know in the chat box. All right, let me know in the chat box. Okay, I'm interested to know. Okay, on a scale of 1 to 10, how would you rank the current market right now? Okay, so I see a lot of 2 and 3s. A couple of you type 1s. Okay, so all of you basically think that the current market right now is quite bad. I see a 4, a 1 again. Okay, so I think it is. I can conclude that I don't think I see anything above 4. Okay, so I think I can conclude that the market right now is not great. Okay, the market right now is not great. So when the market is not great, the first thing is, of course, we do not try to sort of like have over trade in such market. Okay, we don't try to over trade in such market. And if you're an investor, you should be doing a bunch of analysis and try to see if there's any buying opportunities on certain whatever counters or companies that you want to invest in. And also during a bear market or a choppy market, okay, or whipsaws, whatever you call it, when the market is not great, personally, I think that it is great to sit down and have a conversation with ourselves. Now, what do I mean by that? It's like you have been trading or investing in the market for the past couple of months or even years. How satisfied are you with your current performance in the stock market? All right, so we're talking about Bursa market right now. So I assume that most of you here, you have trading or investing or you participate, okay, in the stock market, okay, the Bursa stock market, Malaysia stock market. So it is time to have kind of like a post-mortem session, okay, with ourselves and see what are the things that we can probably improve. Because like it or not, tough time, okay, don't last, okay? Tough time, they are not forever, okay? Good times will come, the market will rebound. The only thing is, how are you going to prepare yourself when the market, recover? Do you know what is your, your age or what you're good at, what you're not good at? So try to enhance. What we're going to do is try to enhance what we are good at and try to avoid things we are not that great, or try to, at least we know what we are not good at, and then we try to make corrective actions. So here are the content outlines for tonight's sessions, okay? The first one being the 4 types of behavior in the market, okay? And this is primarily structured or tabulated based on the way you face, okay, how you react to profits and also loss, all right? So second, understand risk-reward ratio and winning rate, because these 2 things are the primary, I would say, risk metrics, okay, that contribute to our profitability. Now, third one is how to take corrective action 1 step at a time, what you need to, improvise, okay, based on the way you currently behave when you face profits and also loss. And number 4 is the most profitable combination and how you can get there with proven strategies. Of course, we are not going to just tell you like, based on like behavior, this and that is not good and this is better or what. Okay, I'm going to show you what's the most profitable combination. And if you're not in that quadrant, okay, later you know that it's a quadrant. Okay, if you're not in that quadrant just yet, what you can do in order to get there with proven strategy. So if you're ready, type ready in the chat box. Okay, I need you guys to participate so that you understand, okay, what I'm talking about. All right, so if you're ready, type ready in the chat box. Okay, so by participating in tonight's sessions, you understand better of the concepts later, so that you better understand yourself, okay, later on when it comes to, okay, all these things. Okay, now, very good. Okay, next. 4 types of behavior in the market. Okay, so let's go through it. So there are 4 types of behavior in the market. It's a combination of behavior. So basically, you have 2 axes here. One is profit and one is loss. Okay, one is profit and one is loss. And now you're going to ask yourself 2 questions. Okay, now you're going to ask yourself 2 questions. Do you usually, okay, okay, the first question is this. When you are having profit, okay, be it you're an investor or you're a trader, when you're in profit, do you usually, okay, sell very quickly or you hold on longer? Okay, so I will give you a threshold. Okay, the threshold is 15%. All right, do you usually take profit when your trade is less than 15%, or do you usually take profits when your, okay, unrealized gain? Now we're talking about unrealized gain. So do you take profit when you have less than 15% gain or more than 15% gain? All right, so if you are less than 15%, this is what I would say, at least in tonight's session, is small profit. Okay, when it's larger than 15%, then it's large profit. This is your profit-taking behavior. All right, so small or big. Okay, type in the chat box S or B. Okay, communicate with us. Okay, S or B. Now this is based on your average. Okay, so how long average? Okay, if you have been trading in the market for the past 2 years, then you try to recall based on your last 2 to 3 years trade. Do you tend to have profits that are larger than 15%, or most of your gains are under 15%? Occasionally, maybe that. Okay, take an average. Okay, take an average. All right. Now the second is loss. Okay, the second is loss. Again, I'll just put a threshold as 15%. Do you usually take your loss when it's under 15% or it is more than 15%? Okay, is it under 15% or more than 15%? Okay, so all right, so okay, if you have small loss, okay, usually less than 15%, then it's under 15%. Then you type S. If you have more than 15% on average, then you type B. Okay, more than 15%, then you type B. I can see that most of you are under, like, less than 15%. But if you will ask me to be a little bit strict, usually I would say less than 10%. All right, but just for a middle ground here, we just take 15% because I understand that a lot of people are investors as well. So investors, they don't take loss when it's 15% because they're looking into something bigger. They have longer holding power, right? Okay, so then you will come up with 4 quadrants. You come with 4 quadrants. So again, I've labeled here. Okay, I've labeled here, and let me just see if I can show my pointer. Okay, so this is my pointer. If you have a small profit, small loss, you are in this quadrant. Okay, you have small profit, small loss, you're in this quadrant. If you have big profit and big loss, you're in these quadrants, and they are highlighted blue. Okay, blue means okay. Okay, blue means okay. All right, so if you are in big loss and small profit, you're in this quadrant. So big loss, but profit is low. You're in this quadrant. So it is labeled red. And I'll share with you why later, why it is red. And of course, you can see the obvious green here. This is the big profit, small loss. All right, big profit, small loss. Okay, now does that mean that those in the greens are more profitable or they make more money than the blue? Not necessarily, but it comes with some caveats as well. Okay, so let me just explain further. So now I believe that you know which category, okay, which quadrant you belong to, and let me just go through everything. Now the first is small profit, big loss, which is highlighted in the chart right here. Okay, you can see already. Okay, so it is highlighted red. It's highlighted red. So this is where the most I would say retailers are. Okay, hold on losses and take profit too fast. So that's why they have big loss, and then when things are in profit, they take profit too quickly. All right, so this is where the retailers, especially those who don't make money, okay, they are in this quadrant. So what is the problem of this type of behavior? Okay, it relies on super high win rate to stay profitable. Okay, it relies on super high win rate to stay profitable, which is often unrealistic over the long run. All right. Now, most people who behave so are not profitable. And the reason is because of the risk-reward ratio that is not great. And if your risk-reward ratio is not good, you need a super high win rate in order to stay profitable. And high win rate is very it's very tough to be obtained over the long run, especially you have market like this year. How many of you kind of like you suffered winning rate starting this year? Type me, M-E. Okay. If this year your win rate is exceptionally low, you are using the same strategy, but the win rate is low. If you are suffering this, type me, M-E, this year. All right. If you compare to 2020, Okay, if you compare to 2020, I believe that if you started trading or investing after the COVID crash, basically your win rate is very high. Okay, so when the market is great, win rate is high. When the market is like this, your win rate starts suffering. Okay, your win rate starts suffering. So again, these are the things that we all have to know. Okay, high win rate over the long run is somewhat unrealistic. Okay, but of course, there are ways that we can improve our winning rate. Okay, but of course, you cannot just keep relying that again and hoping that the win rate is good and the market is great. All right. So now the corrective action that has to be done to move to another quadrant, because from here, you want to move to either this or this by taking one big move first before moving into, the so-called most profitable quadrant. All right. So what is the corrective action? You either learn how to cut losses quicker. So when you have big loss and small profit, okay, and you learn how to cut losses faster and quicker, you will go into this quadrant, which is small loss, small profit. Okay, small loss, small profit is better than big loss, small profit. Okay, or you take another way round first. Okay, you let profit run, meaning that every time you have a winning trade, you try to trail it and let profit run. Okay, because people who are in this quadrant, usually they have this mindset. Okay, when the stock goes down, okay, they tend to hold on the losses and hope that it will go back because of a bunch of like whatever reasons or excuses. And because in their trading journey, they have been seeing a lot of losses. So when one stock go up, they'll have the fear of losing the profit. And that's why they tend to take profit very fast. Okay, it's like when the stock go up to 5-10%, they quickly take profit already, right? So these are the things these are kind of like the characteristic of the behaviors, right? So let's move on. Okay, so moving to the next quadrant is small profit, small loss. Now, again, this one, it relies on high win rate to stay profitable, but of course, not as high as just now, the one in the red. Okay, so small profit, small loss relies on high win rate to stay profitable. Now, the trading frequency has to be high in order to see huge growth. All right, because it is, if you're in this quadrant, you are probably like scalpers or day traders or some kind of short-term traders or contra players. Okay, because it's very quick. Okay, maybe you risk 5% to make 5% or 10%, kind of like this kind of quick trades, right? So once the win rate is negatively affected, what does win rate means? Okay, because I realized just now nobody give me response. Okay, let me explain what is win rate, because I assume some people may not be really, maybe this is the first time you hear this phrase. Okay, win rate refers to how many trades out of your total trades are making money. If you take 10 trades, okay, if you take 10 trades, 5 trades make money, 5 trades make losses, then your winning rate is 50%. If you take 10 trades, okay, 7 trades make money, 3 trades make loss, okay, then your winning rate is 70%. All right. So again, like what I said just now, I asked the question, okay, how many of you, your win rates drops this year compared to 2021 and 2020? Type yes in the chat box. Okay, type yes in the chat box. How many of you, your win rate drops this year? Okay, now then I see responses. Okay, so again, this explains why we cannot keep, relying, okay, on high win rate. Okay, so again, small profit, small loss. When your win rate is negatively affected, meaning that the win rate drops, then you can quickly go into the unprofitable territory. And the last thing that you need to know is you pay huge commissions in long run because of high trading frequency. All right. So if you're profitable, no issue. Okay, but if you're not that profitable and yet you still have to pay a lot of commissions, which is brokerage fee, then it might not be that great. All right, moving to the next quadrant. Okay, moving to the next quadrant, we are looking into big profit, okay, big loss. Okay, big profit, big loss. Now, first, these quadrants, these people, they rely on high win rate to stay profitable as well. And the holding power has to be very strong. Okay, because if you want to go beyond like 15% territory, usually you need some time. All right, so, and people in this quadrant have huge conviction in the stocks they hold. Okay, they have strong opinions on the stocks, maybe because they believe in the companies. They have to do a lot of research on the management or the deep dive and analyze their financial statement and things like that. So that's why they dare to hold a company even when it is dropping no more than 15% or 20%. All right. So sometimes it may not be great, but sometimes it can be great as well. It depends on whether or not you know what you are doing. All right, so people who behave so are probably investors who rely on fundamental analysis. Okay, that's why they understand those companies and they don't mind holding a little bit longer, even though the stock prices, okay, are going against them. Right, and fourth, profit taking and stop loss points are usually very and inconsistent. And results take time and often unpredictable. So what do I mean by this? Because the behavior of this type of people is, I buy into a company, all right? I buy into a company and I want to see the company grow by like 50% or 100%, okay? And over the short run, okay, the company might drop another 20%, 30%, or even 50%. And this guy is just going to keep holding, if not adding more into this position. Okay, these people are usually investors. So again, okay, I just give an example here. Okay, no buy or sell call. I just give an example. Okay, we all know that glove stocks are not doing well right now. Okay, just an example. Glove stocks are not doing well right now. So maybe there are some of you who think that glove companies, they are still profitable. Okay, over the long run, just that right now it might not be great. Okay, maybe you need another 2 years, 3 years to stay profitable, or at least to see another 50% gain or 100% gain. Who knows? Okay, maybe you have a trading plan, you have an investment plan. Top Golf, for example, okay, no buy or sell call, just example. You're gonna buy at $1. Okay, $1, you buy a bit. If it drops 20% to 80 cents, for example, you buy one more. Okay, usually there are some people who have these kind of strong opinions to the companies. They believe in the company, right? And maybe after 1 or 2 years, things starts to equalize. Okay, and the supply and demand and whatever things goes to equilibrium and things like that. And maybe you believe that Top Glove, being the big brother of the glove sector, is going to pick up in terms of revenue, profits, or whatever, and the stock price might go up to 150 to 2 ringgit, and then you can make like, I don't know, 100% gain. Okay, so is this possible? Okay, definitely yes. But is this possible in a short run? The answer is definitely, we all know that it is impossible for all this to happen in short period of time. Maybe it's not possible for 3 months, 6 months, or even maybe 1 year. So people with this kind of, pattern or behavior when it comes to profit and loss, they are usually investors. And why do I say stop loss points usually varies and inconsistent? Because halfway, they might just liquidate everything, okay, and take the loss for whatever, fundamental reasons, okay? And when it comes to profiting, maybe this time the company, based on whatever valuation, they can hold up to like 100% gain or 200% gain. But for maybe another sector, they think that, okay, maybe 20 to 50% gain is okay already. Have to take profit and run already. Okay, so that's why I say it is usually inconsistent. Okay, and based on a lot of fundamental reasons instead of technical hard prices, I would say. Okay, and results take time and often unpredictable. Imagine this type of strategy. They are not, I wouldn't say that these strategies are bad by all means. Okay, it is just that yes, this guy might make a lot of money. Okay, don't get me wrong. I have friends who bought AirAsia, okay, last time when it drops to, the previous wave, okay, when it drops all the way down below 1 ringgit and 80 cents and 70 cents, they buy. And then when it recovers back to, like, I think the highest point was around 3, okay, they take profit at around 250 to 3, they made a lot of money. Okay, but this entire cycle is not going to be short. So in order to have enough sample size to even know what your win rate is, it takes time. Okay, it takes time. If let's say you need a sample size of 50 in order to know your win rate in a more consistent basis, it is going to take years, because investors don't buy 50 companies in 1 year. Okay, but if you are a day trader, you probably trade 50 counters in a month. All right, so that's why when it comes to sampling, okay, this category, it is quite tough. Right, but again, I don't mean that they are not profitable by all means. It is just that this is their behavior, and if you fall under this category, you will probably tell me that sometimes I take a lot of profit, sometimes I take less, depending on the market situation or depending on the company. I think I think I saw such comments like that. Okay, this is the kind of like the traits of this group of investors or traders. All right, they have other criteria that might interfere or affect their buying, selling, or holding decisions. All right, so let's move on. And this is the last one: big profit, small loss. And if you were to ask me, this is the holy grail of behavior when it comes to the market. Okay, trading or investing in the market. Now, first, you hold on strong stocks with momentum, strong momentum stocks only. That contributes to the huge profit part, and you cut losses quickly. Okay, you cut losses quickly. Now, lower win rate does not quickly turn them into unprofitable. This one later I'll explain. Okay, trading frequency need not to be high, okay, in order to be profitable. Big wins during market bull run, okay, will boost the portfolio return very significantly. Okay, big wins during the market bull run will boost the portfolio return significantly. And last but not least, most professional traders, fund managers are in this quadrant, or at least they are managing their portfolio of funds with strategies that contributes to this type of pattern. All right, so how many of you are in this quadrant? Can you type 1 in the chat box? Type number 1 in the chat box. Type the number 1 in the chat box. I want to know. I'm interested to know. There are many ways to achieve this. Okay, there are many ways to achieve this, but if you have enough sample size and you can confirm that you're in this quadrant, over the long run, you are profitable. And in a bull run, okay, your portfolio will go up exceptionally high. Okay, your portfolio will go up exceptionally high. Okay, I give you an example. In year 2020, okay, whereby gloves and technology stocks are going up and your win rate is generally high, as long as you don't mess with the wrong stocks, you are in the strong sector, you're holding glove and holding technology stocks. Losing counters, 10%, 15%, you cut loss. Profiting counter, you keep trailing them up. Again, big win, small loss. Glove stocks, we can easily make 50, 100, 150%. Technology stocks, there are a lot of technology stocks that went up, okay, more than 100%. So if you're able to trail them, even with, proper position sizing, your portfolio can go up more than 1/4. Okay, so now here I want to explain the relationship between risk-reward ratio and winning rate. You can see this table right over here. Now, what does that mean? Okay, what does that mean? The first thing that you can see is risk-reward ratio here and rate of winning. And the green territory here is what I call profitable territory. Okay, and this line between the green and the white is the break-even line without considering commission or brokerage fee, if you will. All right. So now, what does it mean? If your risk-reward ratio is 1-to-1, meaning that you risk 10% to make 10%, all right, you need 50% win rate to break even. So remember that two quadrants that are labeled in blue color, okay, small win, small loss, and big win, big loss. So the risk-reward ratio is kind of like close to 1-to-1. You might not be 1-to-1, but most people might be close to 1-to-1. Maybe you're a contra player, okay? Contra player, they like to do this. I risk 5 cents to make 5 cents, okay? This one is risk-reward 1-to-1. All right? So investors, same thing. Sometimes a stock can go down like 20%, 30%, they still hold. But again, when they go up 30%, they also sell. Okay, this one is 1-to-1 risk-reward ratio. Okay, so those in a red territory, okay, which is small loss, big loss and small gain, okay, small profit, they are probably in the maybe 2-to-1 risk-reward ratio. Again, risk, then reward. So the first number is risk, reward is second. So 2-to-1 risk-reward ratio is like when they risk 10%, for example, but stop loss 10%. But when things are profitable, the stock goes up, they take profit at 5% gain. Okay, so this is risk-reward 2-to-1. So for risk-reward 2-to-1, they need to have 66.6667%. Okay, they need to have 66 to 67% winning rate in order to break even. So that's the reason why I mentioned earlier, this group of people, they need exceptionally high winning rate in order to be profitable. Okay, in order to be profitable. And again, the last one is if you can risk 1 to make 2, okay, meaning that you risk 10% to make 20%, for example, your winning rate, okay, in order to break even, your winning rate need to be 33%, okay, which means very low. Okay, you don't have to rely on high win rate in order to stay profitable. Now, when I mean profitable, I'm not saying how profitable. I mean, I'm trying to say that is profitable means you don't lose money. You're making some money. Okay, so now the better the risk-reward ratio, the lower the rate of winning, okay, required in order to stay profitable. And the bare minimum risk-to-reward ratio, in my opinion, okay, at least is what I always, when people ask me this, what I share. Risk-reward ratio is 1 to 1.5. And with this risk-reward ratio, you need around a 40% winning rate to break even. Okay, around a 40% winning rate to break even. So meaning that 50% winning rate, you already make some money. If you can stretch, okay, your reward to 1 to 2, for example, then you make even more. Okay, so traders should always work on these two metrics, as the rate of winning and your risk-reward ratio heavily define your edge in the market. All right. So once you know your edge in the market, you can easily scale your portfolio by increasing, your risk per trade or simply by taking more trades. Okay. So this one is if you follow proper position size. Okay. So for example, if you're a trader right now, okay, for example, you're a contra player, which I'm not. Okay. If you always, okay, risk 3% to make 3%, you are somewhere around here in order to break even. Now, if you can stretch a little bit, okay, 1 to 1.5. So maybe you risk 3% and you target 4.5% or 5%. Okay, then your required winning rate is somewhere around here, which is around 40%. Okay, around 40%, slightly less than 40% in order to break even, but before the brokerage fee. Okay, so if you can stretch your winning rate a little bit, you basically make a little bit more money over the long run. But of course, this might require you to twist a little bit of your, tweak your strategies and things like that. You need to do the back test yourself and see what are the corrective actions or things that you can improve within your strategy. All right, so this is just an example. Okay, so why knowing your behavior and understanding risks are very important. Now, first, knowing your behavior makes you understand your shortfalls before they lead you to emotional hiccups. Okay, why do I say so? Okay, why do I say so? Do you see a lot of people, they try to trade in the market, but because of bad risk-reward ratio, they lose money in trading? Okay, we all, from the eye of any experienced trader or professional traders, we already know that this type of people, okay, they don't make money is simply because their risk-reward ratio doesn't make sense. They risk 2 or 3 to make 1. Okay, but these people, because they don't understand what they don't know, and their trading results, the outcome always lead them to emotional hiccups, and it's not good. Okay, they'll have a lot of like behaviors like, they'll blame this lah, blame that, blame Donald Trump simply tweet lah, blame our prime minister, blame this again, blame GST, blame SST, blame this, blame that. Okay, and that's because they don't know how to solve the problems. Okay, so, and all these things lead to a lot of emotional hiccups. And the second thing that I want to say is, these people, they always, okay, would have what I call revenge trade. Okay, revenge trade, because they already don't know what they're doing, and the more they lose, the more desperate they want to make the money back. Okay, and then, a lot of people might take even more loans, okay, take out the savings, whatever things, and have revenge trade, especially, contra players. Okay, they are trading on a limit, okay, and they have bad risk reward. Okay, so it's very dangerous. So knowing your behaviors make you understand your shortfalls of your strategy, or at least the way you're behaving in the market right now, before they lead you to emotional hiccups. Because by understanding this, you know what you are not good at. Okay, it is not a sin, okay, to be bad. Okay, I started in the red quadrants as well. Okay, I started in the red quadrant as well, and I believe a lot of you started in that quadrant as well. And then slowly you understand that things might not be great, and then you move. Okay, so that's the thing that I want to, really stress. Okay, now, second, understanding risk would put you into a better position when you want to take corrective action. Okay, so later I'll share with you how can you take corrective actions and shift your quadrants, and one action at a time. Okay, especially those who are in the reds. Okay, meaning that you have big loss and small win. You either improve your win rate or improve your risk reward ratio. Now, this depends on whether you have high trading frequencies or low trading frequency, or at least you try to have a conversation with your inner self and ask yourself which type of traders or investors you want to become. Because if you have no time monitoring, then why go for, small profit, small loss, that quadrant? Because that quadrant, you probably need to, be a little bit more active in the market. All right. So if you want to be in the big win, okay, big profit, big loss, that quadrant, okay, what you need to do is you improve your risk reward, okay, by raising up your profit. All right. So, and also, for example, if you are in the quadrant of let's say the day trading, you are a day trader or you are a contra player, you are in a small profit, small loss. Okay, how can you improve if you're already in that quadrant? Okay, but you don't want to shift your trading pattern. okay, then what you can do is you try to improve your win rate. You can also make more money. Okay. Once you find the sweet spot for yourself and start seeing some consistency, then you can scale your portfolio one step at a time. Okay, with proper portfolio management. All right. Don't scale too fast. Okay. Don't scale too fast. All right. So, how to take corrective action? Okay, one step at a time. If you want to move to the green one, which is big profit, small loss. Okay. So, if you're in a small profit, big loss quadrant, first, I will recommend you to learn how to cut losses quicker. Understand that a lot of losing trade, there remains losing trade. All right. So next is learn how to let profit run. Okay. So to let profit run, you need to learn a strategy. If you're in the trading side, you need to learn a strategy called trailing stop. Okay. Trailing stop. Next is small profit, small loss. Okay. If you want to improve to the green quadrant, then you need to learn how to let profit run. Now, by improvise this, let profit run, it doesn't mean that you need to hold a stock until home run. Okay. Maybe you're just a short-term traders or a swing traders. Okay. Maybe now you risk 5% to make 5%. What you can do is you try to squeeze yourself a little bit. Try to make target 7% profit instead. It might be just a few candles away, okay, and see whether that would affect your winning rate. Or even if it affects the winning rate, you need to see whether or not it is worth it. Both from your emotional well-being standpoint and also profit standpoint. All right. So last but not least is if you have big profit, big loss, okay, if you want to improve this, you try to minimize or cut losses quicker, minimize unnecessary extra loss, unnecessary, buffer that you give a stock to go lower before you cut your losses. All right. So now I want to share with you the most profitable combination and how you can get there with proven strategies. Now, before that, I just want to ask you guys, okay, by showing you these 4 quadrants, do you have more clarity on how you behave? What are the pros and maybe what are shortcomings when it comes to yourself, okay, investing or trading in the stock market? If you get a little bit more clarity, can you please type letter C in the chat box? Okay, somebody asked, what do you mean by let profit run? Let profit run means you let the profit to go higher and higher. Okay, not to say let profit run away. Okay, it means that, okay, you take profit because sometimes when the stock go up, you take profit, you realize that the stock can go up a lot higher. Let profit run, it means you're in profit already, you let the profit go higher, higher, higher until a certain threshold that you give it. Okay, so now to show you the most profitable combination, okay, and how you can get there. So this is the strategy that I use and how I get from, the red quadrants to the green quadrants. Okay. So again, I just want to re-emphasize this. Being in the green quadrants, okay, which is the big win, small loss quadrant, doesn't mean that I make more money than those who are in the blue. Okay. It is just that these people in this quadrant, even if we mess up winning rate, we still can make money because of high risk reward ratio. So again, high risk reward ratio is good in a way that, okay, one winning trade can probably let you sustain, 3 or 5 trades before you back to square one. All right. So again, if you have big win and small loss, the good thing is this: you have one big win. Let's say 50% gain. Yes, small stop loss, let's say 10%. One big win, you can afford to take 5 losses before you back to square one. Not to say before you lose money, before you back to square one. But to people who risk 10% to make 5%, one win, okay, cannot even sustain 1 loss. Meaning that this guy have, for every loss that he has, he need 2 winning trades in order to offset the loss. it is not easy. Okay, it is not easy. So that's why I set, okay, with this strategy right now. Okay, as far as trading is concerned, okay, I set with this strategy. So follow the trend, follow the smart money. The core belief of this strategy is called trend following, is that the trend is more unlikely to continue than to reverse. Okay, whatever seems high, go a lot higher. You try to recall what are the stocks in the current market right now. When you think that it is too high already, they always surprise you with even higher prices. Okay, the market right now could be, I know that market today or this week or last week is not good, but if we look at the past 6 months or this year, can you identify some stocks that keep going higher and higher when you think that it's crazily high already, but it still go higher? Okay, some people mention Petron M, probably. Okay, some people might think that it's stocks like Texcam, Chinhin, okay, Bonia, these type of stocks. Okay, and also just to give you some, those who are in the glove stocks, okay, back in 2020, we never expect that it will go to $20, $30. Okay, we never expect that. But you know, realistically, in the market during that time, okay, in the market during that time, I was in Hartalega. I bought it somewhere around 6+ to 7. Okay, I thought it's like, okay, is this going to go to 10, 11? Okay, who knows? Okay, all those glove stocks went up a lot higher than what we expected. Okay, so again, this is what we call trend following. Okay, an uptrend has a higher probability to go way up. All right, so the downtrend is also the same. Okay, who will expect Top Glove to drop to 1 ringgit? Nobody expect that. Okay, we all thought that, wow, the biggest glove company. Okay, so many billions of profits or whatever thing. Okay, we never, okay, before it happens, okay, I never really anticipate that things can go this low. Okay, I thought it's like, okay, maybe 2 is the bottom, 1.5 maybe is like very chaotic and catastrophic already, but who knows? Okay, but what I practice is, if a trend is down, it will probably go a lot lower. Okay, if the trend is down, it will probably go a lot lower. You try to think back the past rally and fall of whatever thing in the market, be it stocks, be it futures, being even crypto. Okay, nobody expect that, you know, Ethereum will drop to 1,000. And last time, nobody expect that Bitcoin can go to like 60 over 1,000. Same goes to FCPO. A lot of people tell me, oh, when 2,000 goes to 3,000, wow, very high already. And look at the FCPO price right now. So again, you can try to recall back all these examples, all these things that we have gone through. Is that true? So trend traders or trend followers will often look into, okay, these things. We look into going long in an uptrend, or we go short in a downtrend, but we are in the Bursa market, in the Bursa stock market, okay? I don't really recommend people going short, okay? When it comes to stock, I only go long because I'm a position trader. I hold a stock for a couple of weeks to months or even up to a year as far as trading is concerned. So I only go long. All right, I only go long. So the primary trend that I'm looking at is uptrend. Okay, it's uptrend. So because again, uptrend will have a lot of, okay, it will surprise us a lot of time. Okay, so I just want to ask, how many of you know this guy? If you know this guy, can you please type E in the chat box? Letter E in the chat box. I want to know how many of you know him. Or you'll see him somewhere before. Because this guy is not as famous. Okay, this guy is not as famous. Okay, I don't see people respond. Okay, so now this guy, you can go and research about him. Okay, you can go research about him. This guy is called Ed Sakota. Okay, the name is here, Ed Sakota. So he remains very low profile. Okay, he remains very low profile. And the reason why people, he gets to, the public gets to know him is because he was being featured, being interviewed and featured in a book by Jack Straggers, called Market Wizards. Okay, and of course, he's featured in a lot of places after that. So let's look at this. Ed Sakota himself has put together a money management track record with returns of roughly 60% net of fees over 3 decades span of his trading career. Okay, 60% return. I think this is a return that to a lot of you is more than what you expected already. Okay, so this is his track record. Okay, so Ed Sakota, first featured in the book Market Wizards, has one of the best records of all time of any trader. Now, Ed Sakota returns of capital compared to those achieved by Warren Buffett, George Soros, or even William O'Neill is, quite remarkable as well. So trading as a trend follower, Ed only looks at daily chart after market is closed. Okay, so do not monitor the market as well. Okay, he doesn't monitor the market. Okay, so he turned 5,000 into 15 million over 12 years time in his model account. Model account is actual client account. Okay, and he was self-taught but influenced early on his career by Richard Donchain's writing. So Richard Donchain is he's the father of trend following. Okay, he's the father of trend following. Okay, so if you're in the market, you've probably heard strategies like when EMA5s or MA5 cross 10 or 20, you buy. Okay, when it bearish crossover, it sells. Now, this concept is first introduced by Richard Donchain, and he structured this. He used this type of strategy even before we have a lot of charting tool. He has to calculate the MA5 by adding the 5 days closing price together and divide by 5. Okay, this is his era. All right, so you can just go and look up at this strategy. You can look up at Ed Sakota and also Richard Donchain. Okay, so you hardly find a lot of readings or materials in about trend followings, but you can go and Google and search these people, and you can find how do they tackle the market, and it's very interesting to read. Okay, so again, right now the market has less opportunity to trade. You can look at these people, but again, some of you might be investors. Okay, some of you might be investors, and you are looking at opportunities to scoop some shares at a dirt cheap price. Then you follow your strategy. Okay, and based on the 4 quadrant just now, you can see what type of behavior you are in and what kind of corrective action you can sort of improvise. Now, these are the Ed Sakota's 5 most cherished trading rules. The rule number 1 is cut losses. Okay, cut losses. Second is right winners. So I just want to focus in these two because these two combination gives you the ability to go into the green quadrant, which is small loss, big win. All right, the rest you can read. You can even go and search Ed Sakota's quotes, and you will understand why keep bet small. And there's another thing called pyramiding. So pyramiding is a strategy whereby when the stock go higher, or anything that he trades go higher, and higher, he add. But of course, pyramiding. The higher the price goes, the less you're going to add. Okay, this is what I call pyramiding. So that's why this will make a small initial positions into a super profitable one. Because if the stock drops against you, you don't add anymore. Your loss is just capped at the initial positions and the stop loss level. That's it. But when it goes up, you tap on those trends. Okay, so now, again, this is what I want to share with you. The rise and fall of a trend. Okay, the rise and fall of a trend. This is Top Glove. Again, unexpectedly, okay, we kind of like never expect that this trend can go like 500 over percent. But when it drops, also nobody expect that it can drop until where it is today. Okay, remember this as a case study, because I think this a case study is extreme enough for us to understand that trend always surprise us. Okay, whatever seems very high can have the ability to go higher, and whatever seems low can have the ability to go even lower. Right? So now here are the general rules to trend follow and position trade. So these are my criteria. Again, these are my criteria. So you may or may not, be able to trade with these things, but what you can do is you take away these rules and then you do your own back test or study. I give you my rules, and then you go and do your own studies and see whether or not, okay, it is going to work well at your side. First, I pick stocks that are in an uptrend only. My own practice is this. My primary focus is stocks that are at an all-time high. If it is not at an all-time high, it must be at 52 weeks high. If it is not, then it must be at 3 months high. All right. So actually, you can go and see whatever stocks that already reaching their 52 weeks low, you buy 10 of them, most probably they are all going to go lower, regardless how good, okay, you label the company is. Okay. So next, I watch for any temporarily pullback or correction to a support, ideally a short-term support. Okay, it can be a trend line, it can be a price support level, it can be a dynamic support. So dynamic supports refers to all your EMAs or MAs. Okay, these are what we call dynamic support. Next, you plot an entry when there's a rebound or price action. Okay, showing you the potential trend resume. Now, let me explain this. An uptrend does not go up in a straight line. It will somehow retrace a little bit. But when it retraces and drop, I don't buy. Why? Because this could be the beginning of a downtrend. Okay, that might be the top already. To increase my win rate, I buy only when it turns up and show me kind of like a higher low. So we all know that higher high, higher low is an uptrend. So when there is a higher low and it rebound with a price action, meaning that the stock rebound 10% and then the stock retrace 10% and then it now rebound 4-5%. Okay, half of the corrective wave ready, then I can buy. Okay, or the stock touches a support, can be like whatever your EMAs that you are using or MAs that you are using, and it shows kind of like a bullish rebound or bullish candlestick pattern, then you can enter based on your sets of rules, right? So, and then set a stop loss below the short-term support or 10%. So for example, if a stock were to hit 20 days average and then rebound, you buy at the rebound because there's a potential trend resuming, trend continuation pattern. You just put a stop loss below the 20 days average or 10%, right? Or 10%. So this is just an example. Okay, so Hong Leong Bank, you can see that when it's going up beginning of this year, kind of like break new high, go up, retrace back down, go up, retrace back down, and right over here, okay, at this EMA, okay, it rebound. You can actually buy right over here. Okay, you can actually, let me annotate. Okay, you can do like this. Okay, when it retrace, rebound, you can buy. You set a stop loss here. Maybe here you got wake up. Okay, but of course, this one you need to calculate. From here is around 20 over dollar, 20 over ringgit. You put my maximum sort of like cushion I will give for a stock is 10%. So when it retrace and rebound, I probably buy here. And it is like, here is right over at somewhere around 20. So My maximum stop loss is 18. So you can see that 18 is somewhere way below here. So in this case, I don't mind put my stop loss a lot lower. Okay, you can even put 8%, 10%. So you can have a lot of choices. Okay, you can have a lot of choices. So if you put your stop loss at 10%, it will be down right here. And then the stock, go up, go up, go up. Okay, this is how I take trades in a nutshell. Okay, or right over here, it goes up, break new high, come back down to a support, go up, you buy right over here at around 20 as well, around 20, stop loss down here. You don't even need to put this low. You can probably just put at the 1 month low right over here. Okay, then you have a tighter risk. Okay, and if you take profit somewhere around here, you probably have a 1 to 1.3 risk reward ratio. All right, so next, just give you a one more example. Okay, this one, hibiscus. You can also see, but of course, right now, this stock is already getting weaker. Just for the sake of demonstration, let me show you. Okay, this is an uptrend, but we don't chase when it is going up. We don't chase when it's going up. Here, it reached a support and go up. So those who know how to read a candlestick pattern, you can see this is a bullish candlestick pattern. Okay, if you do not enter here, then of course you can wait until you go up, come down, go up, rebound. You can buy right here because this is a higher low. Okay, so higher low is a uptrend continuation pattern. Okay, uptrend continuation pattern. So you can buy here, set a 10% stop loss, and then maybe a 1.5 times risk reward. Some take profit somewhere around here. Okay, or you can do trailing stop. So later I'll give you an example of trailing stop. So basically, let me just show you. Trailing stop basically means, okay, when it retraces in an uptrend and go up, you buy, let's say, based on candlestick pattern. Okay, candlestick pattern, this one. Okay, and then after that, you put a stop loss down here, you buy here. Okay, your stop loss is below the low, swing low. We go up, come down, and rebound. You move your stop loss from here to here. Okay, go up, come down, go up again. You move your stop loss from here to here. Okay, and then you go up, come down, go up. Okay, you move your stop loss to here. And right over here, it's not very accurate now. Okay, this is a swing low. You put your stop loss like few cents below here. So over here, you got kicked out. So you don't have to even monitor. If it is out, it is out. It means that the trend is probably a bit weaker already. Okay, so of course, there are a lot more details for you to find out in this type of trading strategy. Okay, but this is what we call trailing stop, and it allows us to ride big trends. But of course, when trailing stop is hit, you don't need to exit everything. You can sell half. You can set your own trading rule. Okay, right now, for example, okay, if your trading behavior is like you risk 10% to make 15%, for example, your risk reward, you fix it at 1 to 1.5, you take profit. So if you risk 8%, then your profit taking is 12%. You don't have to take all. Maybe you start from, okay, Jin Hao said, my strategy is okay already, okay, because I risk 10%. It's small loss, but I want more profit. So what can you do? Okay, you don't have to force yourself to use trailing stop. What you can do is you learn trailing stop, and then, or any strategies that can improve your return. And then when it goes up, hit your target profit of 1.5 times of the risk. For example, you risk 8% and your target profit is 12%. When it reaches 12% profit, you sell half, or you sell 70% of your positions, meaning that you got 10 lots, you sell 7 lots. Another 3 lots, you trail it. That's also one of the strategy. One of the ways how you can improve along the ways without, stressing overstress yourself, give yourself too much stress or, unnecessary emotion. All right. So this is the reason, crazy one. And right now, of course, we know that this stock is already falling because I prepared these slides way earlier. So TechScam, let me just show you. There are a lot of, okay, here is the beginning of uptrend. So those who learn, whatever EMA cross, you don't have to use mine, okay? Because when a trend is up, Okay, a lot of people are obsessed with, oh, Jin, how use 20, 50, 200, or later I add more lines. Oh, because you use this line, you are so successful. No such things. When a trend is up, you use 10, 15, 20, 25, 30, 35, 50, 40, 80, 100, 200, it will be the same. When a trend is up, whatever EMA combinations you are using, it's going to be the same. The most important thing is you need to have a combination of EMAs or MA that represents short-term, mid-term, and long-term. Okay, that's the only thing. Okay, so now here is the beginning of uptrend, as you can see. So here it retraced, rebound is the first buying opportunity, second buying opportunity, third buying opportunity. Okay, fourth buying opportunity, fifth buying opportunity, sixth buying opportunity. Okay, when I draw something like this, it means retrace and rebound. All right, so there are a lot of ways how you can do this. So if you happen to buy, okay, let's say I assume you don't buy right over here, lah. Okay, let's say you were very late, because sometimes I identify stocks late as well. Never mind, it's okay. We follow the trend. So if you retrace, rebound, I buy here. It's probably already late. People will see, wow, this stock I used to be like 70 cents. Now already 250, too high to chase. Now, who said too high to chase? The thing is, you don't use a mindset of chasing. You have to strategically, okay, plot your entries. I don't think it's chasing, because when you have a proper strategy, you can definitely still ride the trend. So let's say you can, plot a trade somewhere at this rebound, okay? And this could be like somewhere around, I don't know, 260, 270, somewhere around here. So your stop loss is somewhere below here, okay? And when it retrace and rebound, you move your stop loss upward. Retrace, rebound, you move your stop loss upward. Okay, probably now got hit a little bit. So you buy the stock at 270, you sell it at 330, not at the top, never mind, because we use trailing stop. You buy at 270, sell at 330. I don't think it's bad, lah. Honestly speaking, I don't think it's bad. Okay, I don't think it's bad. So again, there are a lot of ways, okay, you can profit from market, and I'm just suggesting you one that I'm using. Right, so this is another one called Bonia. Okay, so again, uptrend formation forms long time ago, and here is the first correction that goes to this mid-term support. Okay, when it goes up, okay, retrace, go up, you can buy, set a stop loss here. Okay, retrace, go up, you can buy, set a stop loss down here. Okay, retrace, go up. Okay, I don't know. All right, so you can probably use this as an idea, okay, and then you edit, okay, with the style that can fit the way you trade. All right, so again, if you enter right way before, okay, right over here, you enter stop loss, you move your stop loss, move your stop loss. Okay, so of course you can be like, okay, so this one is your 1R. Okay, you buy at somewhere around 225, sell stop loss at $2. So when it's like 260, you sell half. Okay, then you secure a little bit of the profit in case you mess things up, especially like the current market situation. When it hits 1.5R, it's okay to take some profit first, because right now the market is very uncertain. Take half profit first. At least if anything happens, you screw up, okay, it is not going to be a bad trade after that. Okay, so I believe that will be all for today's sessions. All right, so I'll hand over the sessions back to Shane, and I'll answer your questions.
All right, thank you so much, Jin Hao, for a wonderful presentation on the behaviors in trading and investing. I like the diagram that you show, and you highlight that, how do we, what are the behaviors in different kind of quadrant. I think that is a very clear explanation for us to identify, okay, which quadrant are we at right now, and how do we make changes in ourselves so that we can move to the right quadrant. All right, so if any questions for our speaker, Jin Hao, today, kindly write them in the Q&A box, so we'll address them accordingly. We have about 15 minutes for question and answer. All right. The first question is, how do we work out a stock that will give us the risk to reward ratio we want?
Okay, so the first thing, you cannot be like, okay, this stock is going to give me the risk reward I want. So as I said, risk reward, winning rate, these two metrics, you need to trade a period of time before you know. Okay, because risk reward, it depends on how you react on things. Okay, it depends on how you react on things. Sometimes if you identify a stock earlier or later, it will affect your risk reward as well. Okay, sometimes maybe, okay, there's a bad market situation. If my stop loss is too tight, it will affect my risk reward as well. So again, we don't get to choose the risk to reward ratio. Again, a lot of things will affect these metrics and also winning rate, not only risk reward. So this one is a set of things that we need to adjust, okay, down the road. Okay, adjust down the road. So it is not like we can identify, okay, this stock is going to give me 1 to 3, or this stock is going to give me 1 to 2. But I can just share with you, maybe, okay, like sometimes a couple of situations, it is not good to assume that we can get great risk reward. For example, if a stock have a double top, okay, and right now it retraced down and want to rebound, you have to assume that that double top is a strong resistance. And if you buy right now, you set a 10% stop loss, you have to expect the stock will retrace from that double top. So again, from your entry to that double top, is that going to give you more than, 10%? Because you're risking 10, and is that distance going to be 10? Okay, if it is less than that, usually I would not trade this one. Okay, because you have a very strong overhead resistance that probably gonna sort of like not giving you the kind of risk reward that we want to, ideally achieve. All right, so unfortunately, risk reward, this kind of thing, at least from the strategies that I practice, I don't get to choose the risk reward, but I follow the strategy for a period of time. Then I know how my risk reward is. Because if I give the same strategy to every one of you, okay, you practice the same thing, every one of you is going to achieve different risk reward. Okay, achieve different risk reward. Again, these quadrant things, don't force yourself to be in a specific quadrant. Okay, don't force yourself to be in a specific quadrant. What you need to do is understand your shortcomings and improvise things a little bit by a little bit. Now, for example, if you are short-term traders, you have been short-term traders already. Okay, you have been contracting for like 10 years. Okay, don't force yourself to be an investor. It's impossible. The only thing is we need to know, okay, after these sessions, you already know that your risk to reward is probably close to 1 to 1. So to understand your shortcoming of this type of behavior is like, okay, if market is not good, my risk reward is somewhere around 1 to 1. So I need high win rate to maintain profitability. So when market is not good, you don't force yourself to trade too much. That's the thing, like understanding, okay, our shortfall. Like my trading shortfall is market like this is also not favoring me when it comes to winning rate. So I don't take unnecessary trades. Because when you don't trade unnecessary trades, you also increasing your winning rate. If that makes sense. Okay, so again, risk reward and winning rate, these two things we don't get to choose. Okay, it is like down the journey when you look back at your past trades. Okay, what are the average? Okay, what are the average? Because it is really a broad thing. Okay, it includes a lot of things like what type of stocks do you usually look at, and how do you trade? How do you behave? All right, so we don't get to choose. All right, so yeah, I think that will be my answer to that question. Bang, I believe it's Bang Hin Chong, is it?
Yeah, I think his follow-up question is, say from the price at the resistance, from the price at the resistance and from the price at the support, with both these references to the closing price, how do we work out the risk to reward ratio?
Where is this? Okay, I saw it. Say from the price at resistance and from the price at the support with both reference at the close. Say from price at the resistance and from price at support with both reference to the close. Now, you don't get the ratio of that particular trade until you close position. Okay, you don't get to know your risk reward for that trade, okay, until you close that position. So again, we don't get to choose risk reward. The only thing I'm trying to share with you is based on your trading pattern and how you behave in the market, what's the kind of risk reward, okay, you get on average. Then you try to improvise from there. Now, I give you an example by sharing a chart, the latest chart of Bonia. This is a situation whereby I would say that it is less ideal to think that the risk reward is going to make sense. Now, for example, this is an overhead resistance of, I can see my chart, right?
Yes.
Okay, so 283, somewhere around here, 283, 284. Now, for example, if you want to buy Bonia right now, at this price, 263, your stop loss is probably going to be 10%. So assume that this resistance is not going to break through. Okay, you want to take profit at the resistance, or at the resistance it turns down. So your profit is kind of like realistically, the potential is only like 7 to 8% because there's an overhead resistance, but you're risking 10% in this case. So then I wouldn't take this trade unless I anticipate some kind of higher potential. Okay, unless I identify that this stock has a higher potential to break out for whatever reason. It could be divergence, it could be a lot more reasons, or else it is much better. Okay, it is much better to buy only when it breaks out. All right. So again, this thing you have to adjust along the way. Okay, adjust along the way.
Okay.
All right. So again, risk reward ratio, you wouldn't know the risk reward ratio of that trade until you close that position. So what you need to do is figure out on average, okay, how much are you making in relation to the risk that you are taking. Yep.
Okay, thank you so much, Jin Hao.
Yeah.
The next question is by Cheng. How do we set up trailing stop?
Okay.
Are you able to show some examples?
Okay, I can show you some example. Okay. Let's say let's just use Bonia. Okay, let's just use Bonia. So let's say you buy here. Okay, why do you buy here? Okay, because the stock has been in an uptrend and it rebounds, and right at 220 you buy. At 220 you buy right over here. Okay, I just draw a line, 220. Okay, so 220, 217. Okay, for example, because it's a rebound, you buy here, you set a stop loss down over here. Okay, below the swing low, so it's like around 8%. So my stop loss is here. All right, so after that, the stock go up, come down, and boom, go up again. It forms another swing low. Okay, it forms another swing low. So what I do is I move my stop loss to below this swing low. All right, I move my stops to below this swing low, and then the stock go up again, come down, go up. I move my stops to below this swing low. All right, I move my stops to below this swing low. And right now it goes up, come down. If it go up again, successful rebound, then I'll move my trailing stop right over here. Okay, so instead of fixing the amount of profit, then what I do is I let the profit run by just moving my stop loss higher, 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 and higher. I just show you the extreme example. Under this situation, and under this kind of using this strategy, okay, how can you take profit on stops that are high flying? Okay, just show you top glove. Okay, right. So again, maybe you buy somewhere around here. Okay, you buy somewhere around here. So it go up, it went up. Okay, let me just, because I only have one screen, I have to move a lot of the peripherals here and there, okay, in order to show you. So if you see me do weird things, then you know what happened. Okay, so maybe you buy at this rebound. Okay, you buy, set a stop loss. Then when it comes down, move up, you move your stop loss. And then when it go higher, higher, and higher, okay, it goes up, go sideways, and then boom, go up. So how you can do is you set a stop loss below the sideways, below the small, some people call it like a flag pattern. You put it down here and then go up, come down. Okay, now this one is a bit based on situation, okay? Because when you have a series of bullish candle going up already, you might want to trail based on candles to lock in more profits first if anything were to happen. Okay, if anything were to happen. Now, let me just do an example here. Okay, do an example here. Let's say you buy top glove when it's like this. Okay, you buy top glove when it is like this. Let's just say you buy at this level. Okay, 676. Okay, and then you'll put a stop loss down here at 635, for example, and then you go up, go up, go up, go up, go up. Okay, then you don't care because right now, understand that. Okay, you buy somewhere here, you put a stop loss here. This one is just around 6%. Okay, and then your profit right now is just somewhere around 6%. So it's 1-to-1 risk reward. Now, next. Okay, it go up. Okay, it go up again. So I move my stop loss from 6.35 to somewhere below here, which is 6.96. So again, because I buy at 6.76 and my trailing stop is 6.96, I lock in some profit first. When I say lock in profit, I don't mean that you take profit. Okay, I don't mean that you take profit. What I'm saying is you are essentially, okay, going to tell yourself, if anything were to happen, I'm going to sell at somewhere around 6.99, and at least I have 3.2% profit while I'm letting the trend to go up. Okay, I hope this clears some of your questions or confusion about trailing stop. It's like this: it goes up, 1-to-1 risk reward ratio. I don't want to sell here because it still has a potential to go up. So what I do is I raise my stop loss going up. Okay, or along the way, I raise my stop loss when it's not go up to below the new swing low. Okay, or anywhere that I want to sort of like lock in the profit. So here I would say that, okay, because the stock come down and go up, I want to lock in my profit if it turns below this swing low. Okay, so and then go up. Okay, now in this case, you might be saying, okay, putting at the previous swing low is a little bit too much. Okay, it's a bit too much. So I want to put it at maybe 2 days low in this case. So at least I want to lock in 25% gain while my unrealized gain right now is sitting at 52%. Okay, so this is the way that we treat trailing stop. Okay, so again, next, it go up. Okay, so my unrealized gain is sitting at 53. I don't care. I just want to trail all the way up. So maybe right now I want to move up a little bit. Okay, I want to move up a little bit. So I move to these 3 days low. So maybe I lock in 38% while my unrealized gain is sitting at 55 because we don't know where is the low. Now, honestly speaking, during this period of time, how many of you were in year 2020, you think that top glove 10 ringgit is already very high? To be honest, if you think it's already very high, you type 10 in the chat box. You type 10 in the chat box. Be honest. During that time, cannot see the chart?
Can see.
Seriously? But a lot of people
we can see.
Huh? Can see,
Can see.
Okay. So the beauty of trailing stop is I don't want to guess where is the high. So I just trail. Okay, I just trail. So next, okay, does not hit. Maybe probably I don't do anything. Then it go up again. Okay, go up again. So in this case, you can also treat this as a small retracement or a small like sideway. So what I want to do is I move my stop loss. Maybe this one is 10. Maybe I move to like 980 below this one. Okay. Now, how I set a stop loss trailing stop is like this. I set a trailing stop. Okay. Based on the chart, I ask myself, okay, if this is the top growth chart right now, at what price I would say that this trend is no longer worth holding? This is a question you ask yourself. At what point you think that it is no longer worth holding? To me, I say, okay, it is already high flying. I don't know whether or not it will continue the trend. Okay. I set this up. I tell myself, okay, if it were to turn down, then it's no longer worth holding. The momentum is probably down already and people may be panicked. So I set a trailing stop there. So how do you set a trailing stop? In your broker, some of you have the stop order or stop limit order. You can use that. You use a sell stop limit order to achieve that kind of stop loss effect. Alternatively, if your broker does not offer you this kind of stop limit order or stop order, what you need to do or what you can do is use third-party apps like KLS Screener, or your broker might come up with some kind of apps to assist you when it comes, the kind of like apps that you can add your watch list and set some alerts or set some triggers. These are the apps that can help you in the event that your brokers do not have stop or stop limit order. All right. So back to the trailing stop example, you can see that next it went up. So again, my unrealized gain is sitting at 72.5%, and I'm quote unquote locking in 44.6%, which means if anything happened to the stock, I at least have 44.6%. Again, my initial stop loss is only 6%. At this point of time, it is sitting at 44.6%, and my risk reward ratio is running in at somewhere around 7-1 already. So far, if you can follow me until here, can you please type yes in the chat box? I just want to know if anyone is, if you are following me so far and you understand where am I coming from and the idea of this trailing stop. And this trailing stop basically let you, okay, trade without guessing how high is high, because we already know that a lot of times this quote unquote high can surprise us. All right. So next, it go up. I don't know. Okay. So maybe it starts to soften already. So maybe some people look at this gap. If this gap, okay, if this stock were to go down and close down this gap, then it's not good already. Okay, sure, fine. Why not we raise our stop loss to somewhere below this gap? It could be like 11.55. So I'm locking in 69 or 70% gain while having a trailing stop. Okay, having an unrealized gain of 96.6%. Okay, at least I locked in a little bit. Okay, and next, go up again. Then you ask yourself, okay, where you want to set your trailing stop at. Maybe you might be thinking, this kind of momentum is crazy. Okay, so I want to move a little bit higher to maybe like if it were to lose momentum for 3 days. Okay, below this gap. Okay, and then what I can do is I put my trailing stop be at maybe like 12.30, and I lock in 82% gain while my unrealized gain is sitting at 129.6%. Okay, and next, nothing. Probably you're going to keep holding. And oops, sorry. This is a problem. Press the wrong button. Okay, so next, it go down. So because of this event, at least I keep 82% right over here. And then this would depend whether or not you have your trailing stop set to sell partial or sell all. Okay, if you sell all, then probably you need to find new, entry. But if you have still another half, you can trail another half, probably at below this low or see how the stock will behave later. But at least you secure 82% without guessing how high the stock will go. Because normal people, when they get in the top glove or whatever, Hata Lega last time at maybe 6, 7, 8 ringgit, they sell at 10. They sell at 12. Okay, 80% gain to 100% gain. A lot of people are quite scared already. Okay, so I believe this example is quite clear already on how trailing stop works. All right. So Shane, I pass the time back to you.
Yes, definitely very clear.
Yeah.
All right. So thank you so much, Jinhao, for doing this Q&A session with us with an example on how we can set trailing stop. So that shall conclude our question and answer session. So yes, thank you so much, Jinhao, for doing this webinar, which is titled Behaviors in Trading and Investing. Thank you so much.